Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for November 21st, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 367. My name is David Kosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen right now. And today I have arranged for 3 people to join us, all of which were presenters on our Friendsgiving 2022 conference last week. So if you missed that, we had 39 great hours of presentations and trading education. And you can get those just by going to TimingResearch.com, and you can scroll down and see the archives for that event. So today, our guests for today are Michael Nauss of TradeIdeas.com and Sunny Harris of MoneyMentor.com, and the Option Professor of OptionProfessor.com is back to moderate. So I'm going to go ahead and turn over to him.
Okay, great, David, and it's good to be with everybody here today. We're getting some activity, particularly in energy today, but across the board, we're getting some volatility on this holiday shortened week, and so we'll have to see what's going on. Before we get into everything, let's introduce ourselves. Michael of Trade Ideas. Could you give us a little background on yourself, Michael, and what's going on at Trade Ideas?
Yeah, sure thing. So I've been in the markets in different respects for about 15 years now. Funny enough, that's actually when I started to use Trade Ideas as an application and a service. Started at a prop firm when I was in university, scalping high float momentum names and that kind of thing. And then moved on to work in the hedge fund space for a few years, doing a lot of risk management. And this was around 2008 when nobody trusted anyone anymore after Madoff. So I would do a lot of going in and seeing what the hedge funds actually did for their trading, and try to see what the risks were to different clients and everything like that. After that, I started consulting with Trade Ideas and building some systems and things like that with the experience I got watching all the big guys play and trading myself the entire time. I'm a chartered market technician and a chartered alternative investment analyst. So I focus a lot on kind of the quantitative and the technical side of things. But for Trade Ideas, we're a charting, scanning, alerting service. You can build scans to, in real time, find whatever it is that you're looking for in the market. We have some pre-built algorithms that we have for both day trading and swing trading. And I do a lot of playing around with that. So I'm a bit of a relative strength trader. So I look for whatever's outperforming in this market, which right now seems to be a lot of stuff that is incredibly boring as I look through my list, but I'm sure we'll go over that later.
Yeah, because the value is the one that, and the lower PEs is where the bid's coming in. So that's going to show up on your material, I'm sure. Huh?
Yeah, a lot of just for the top two right now is Pepsi and Constellation Brands. So
yeah, all defensive.
Yeah.
That's listen. Yeah, that's where the money flow is going, and what you're doing out there is try to find out where that money flow is going, right?
Yeah, exactly.
Yeah. Okay, great. And we'll get into more details about a lot more stuff as we go on. Sunny Harris, Money Mentor, a little background on yourself, Sunny, and then a little update on Money Mentor.
All right. Thank you, Jim.
Sure.
I am a mathematician, professional trader, and a programmer. I have been trading for 42 years. I love to mentor and tutor people. I do one-on-one coaching to help you become a successful trader, hopefully. I am an easy language programmer. I do custom programming for people. I have written 6 best-selling trading books, and I'm working on my 7th now. I do a free Sunny Side of the Street technical newsletter every Sunday night. Every Tuesday morning at 7 a.m. Pacific, I do a free live trading room. I've done free forums on strategy trading, easy language, technical analysis, and many other topics. I also do a free podcast. We've interviewed some 20 notable traders, legends, if you will, in this industry. And that's called the Sunny Harris Show. And I love to teach people how to trade. And my website's moneymentor.com.
Okay, great. And of course, you're going to share your screen with your Sunny bands when we get going, right?
You let me know. I'll be happy to.
All right, we're going to start out with the question of the day, which is a Monday morning question. We're not going to Monday morning quarterback. We're actually going to ask you what's going to happen. So it's Monday, but the question is the S&P opened up at 3956. Where will we be on Friday? Will we be higher, lower, or the same from 3956? If you want an edge, we're underneath that now, but whatever you think. So Michael, how are we going to end this week on the S&P?
I gotta just go with the trend on this one and say we're gonna end a little higher, right? And if it was a longer term question, I may be a little bit more stumped and think lower. But for the next week, it looks like we're kind of forming a little bull flag here on the market. We had a bit of a pop up, and now we're just consolidating. So all we need is a little bit of a push and maybe a close over 400. I think we might see some continuation.
Sure. And what's your confidence level on that? Would it be above 50-50 or below 50-50, or what do you think?
Very slightly above 50-50.
So a little bit preponderance of the evidence tilts you, but it's not a table slamming type thing.
Exactly. Yeah.
I'm with you. Okay, Sonny, 3956. Where are we going to be? Up, down, or sideways?
Well, that's really hard to tell because I can't tell time on my chart. I can only tell price.
Right.
Looks to me like it's going to drop down at least to the inner sunny band. And it also looks like it might try to go up to the 200 moving average.
Well, this is a good time to throw that sunny bands up so we don't have to leave so much to the imagination.
All right, let's take a look at that. Can you see it?
I can see it. Michael, can you see it too?
Certainly. Yep.
Okay, so what are we seeing here?
Right out here at the end, see that we have this dynamic moving average, which is purple and gold in the center.
Uh-huh.
Then we have two bands, a teal one and a green one on the upper side and a teal and green one on the lower side.
Okay.
And this dynamic moving average was created in the first place to reduce whipsaw, which is the bane of all traders' existence.
Right.
So it looks to me like price is going to come down within this band. Let's make this a little bigger.
Yeah.
So it looks like it's going to come down to me. And
so that's 30. Well, it's already done that. It's around 39.46. So it's kind of doing that today a little bit.
Right. And I think it's going to come lower. But then I think it's also going to try to go up to this 200-day moving average. I don't know if that's going to happen by Friday or not. So I think it's going to come down and then go up. Or
yeah,
go up and
what might add some credence to what you're talking about is I see a gap on the chart here on the SPX between around 38.30 and 38.60, which would kind of come right into that neighborhood where all those the purple and the gold or whatever.
Oh yeah.
So it wouldn't surprise. It would actually be very fantastic if you're bullish to have it go down to that neighborhood, get a buying opportunity, and then have it go up to that 200-day. That would be absolutely ideal, huh?
That would be delightful, wouldn't it?
Yeah, I mean, I would. I might even buy at 38.30. You know what I mean?
Even you?
They could even possibly get my checkbook out at that point. Yeah, because filling gaps is something that occurs, and again, we do have some stuff out there with the COVID in China and with the oil prices, dipping and stuff. So there is a little bit of a selling vibe there. But
you're right.
like Michael says, we're in a world where if anybody burps the right way, we could go up 50 S&P points. You know what I mean?
Easily.
Yeah. So that's why, but again, that gap down there is something that I'm finding intriguing, particularly when it coincides with your sunny bands coming into the purple area.
I agree. That's a good call.
So that would be something to see. Okay. And technical and fundamental things that we are looking at, or anything, that is giving you some kind of an idea on what market direction might be doing. Michael, do you have some, things that are stepping out to you as indicators?
I not one to ask for the fundamental side. I actually try to avoid news as much as possible as a CMT. I find it kind of taints my thinking.
Yeah.
So I'm really just a pure kind of technician when it comes to looking at trend. Now, I like to look under the hood to see kind of which ETFs and which sectors are doing well. And when I was doing that a little bit this weekend, I noticed a lot of the defensive sectors were doing well. And just like we talked about, I have this relative strength algorithm that I use quite frequently to try to figure out, different stocks that I should be adding to my portfolio and what I should be pulling away. And I can get a good sense from that as well, what's going on in the market. So we just chatted about how all the top names are pretty boring, which makes me think that it's going to be one of those times in which it's going to be your kind of boring names. It's going to be the stocks that are defensive in nature. And that makes me a little bit worried for any sort of long-term growth or long-term sustained move, because you expect to see, if the market's going to, be rip roaring, you'd expect to see a lot of tech names. You'd expect to see maybe some pharmaceuticals, some fun stuff like that. But when I'm seeing raw stores and waste management and Enphase and more slower type names,
Yeah.
it just makes me think that, we may be in for a little bit more chop, a little more defensive action.
Well, particularly on the indexes, because they're heavily on tech, and tech is obviously more vulnerable than the value lately. And although it had a nice little spot rally there, but I mean, bottom line is that if the tech gives it up at all, these indexes will probably be able to go down and fill that gap, maybe, you know what I mean? Whereas the stocks you're looking at might do quite well. The indexes themselves might be in trouble because of the tech underperformance.
Well, and that's the concept we're looking for with relative strength, right? Is to just find, like you mentioned earlier, where the money is going, where is everything flowing into, where is everything flowing out of. And in this case, it does seem to be a lot of flowing into defensive names. So if we have the belief that a lot of people do that, these large institutions are slow to move and slow to react and everything, then these kind of big trends will show you where are those hedge funds and large institutions going. And it seems to be, in this case, that a lot of these ones are going into, into more defensive names and into things that they want to hide, right? And when the big guys want to hide, you're probably better to at least be a little bit cautious to maybe hide with them.
Yeah. Do you have any screen sharing that you'd like to do, which might show some information that you have? Or
Yeah.
Because like I say, right now you're speaking about things, but by showing something on the screen, we'd have a more clarity.
Can you see that there?
Sure.
Yeah. So this is Trade Ideas. Again, a charting, alerting, and testing or back testing service. We do some auto trading and algorithm building and all that as well. So this scan that I'm kind of going through right here is basically just looking at a series of indicators that we put together and we rank them. So you can see Pepsi has a score of 85, and it basically just means, simply put, think of, if the stock's above its 200-day moving average, give it a point, and if it's near new all-time highs, give it a point, that type of thing. And then the bottom chart is just comparing pretty much year to date. I can probably be a little more precise, but with the teal line being whatever stock I'm looking at, and the purple line being the S&P 500. So you can see just by looking at the individual names and how well they're doing, a lot of more boring kind of names in here. So for me, this one looks like it's a buyout, but for me, this is where a lot of my trading takes place, where I want to constantly be rotating into the names that are the strongest and then getting out of the ones that aren't. And again, most of these names, some of these look like they might be interesting. So this is a little health insurance broker, but yeah, you're seeing raw stores and waste management and Pepsi and all of this. And these are updated live in real time every 10 seconds. So if and when something changes, I'll be able to see it here. But until then, a lot of boring stuff going on.
Yeah. Can you plug in your own stock and see what it looks like? In other words, like say a client wanted to put in something like, say, Foot Locker, and get an idea if that still looks like a good deal even after it popped up. Yeah.
Yeah, so the bottom kind of green histogram I put in will show that ranking system. And again, it's ranked off of a series of indicators and chart pattern recognition and candlestick pattern recognition. You know, and anything kind of above the 30 or 40 range is okay. You can see that it was doing much better when it gapped, but now that it's kind of failing to hold that gap, it's getting a little bit of a worse reading. Another tool that we have that we used a lot is this white histogram that I have, which is just looking at the pure candlestick pattern. So if you're a candlestick guy, this is another cool one that I'm doing some building and testing with now. What it does is it takes all of the candlesticks, you know, in the kind of chart you're looking at, in the time frame you're looking at, and classifies them as either bullish or bearish, and then ranks them a little bit in the inside, and then gives you this histogram showing, is there an increasing amount of bullish candlesticks or a decreasing amount of bullish candlesticks. So Foot Locker, for example, after that gap up, we are seeing a little bit of an increase of bullish candlesticks. And as someone who really likes candlesticks and candlestick pattern myself, that may show some buying under the hood when, you know, you're seeing more hammers, and you're seeing more engulfing candles, and, you know, all the ones that we know that are bullish, and less of the ones that are bearish overall.
How about Disney? Is this this Iger coming back? Is this the beginning of something big, or does it just look like a one-day wonder?
Well, we're seeing an uptick in the relative strength here, but we are seeing a downtick in the overall candlestick. So, you know, you take these and you combine them with just good old technical analysis, and I really think kind of what happens in relation to this gap here at $100 is going to be important. We all know that the market really loves psychological levels. So for me, I want to see, and I was actually looking at this one earlier in the day for a potential buy, but I want to see a close over 100 just to show that we've kind of conquered that psychological level again. I think if we close under 100, then this thing could be a little bit of a flash in the pan.
And even you can look at sectors like materials XLB or industrials XLI, and you can actually do this also with ETFs on industries, right?
Yeah, and this is something I personally do a lot of. I think there's a lot of value in looking at this, right? So XLB, you know, from a classical charting, you know, characteristics, you've got this little bull flag going on, a big push up, and then some consolidation here. But then, you know, again, I'm trying to look at these other things, and the overall, and just ignore today's action, but overall the relative strength seems to be popping up, and overall the candlesticks seem to be getting more bullish. And on the bottom chart here, we're outperforming the S&P 500. So just by as kind of a weight of the evidence trader, I want to see a lot of these things start to align. So it does look like things like materials might be going on, and that might lead you to I don't know, looking at the different stocks within that sector and things like that.
Yeah, if they were going to be printing money for infrastructure, that XME, which is your industrial kind of metals, is that looking like it's improving? Because on a shaky day, it looks like it's, you know, is that starting to look like it might happen there?
It's looking a little bit flat from the indicators, but from, you know, from the chart point of view, I know it's a little bit far away, but this 40 area, you can see I already had this marked. So I was probably looking at this at some point. You know, it seems like 40 is kind of your zone there. So, you know, that's a little bit far away if you're a support player. But really, again, from a classical standpoint, we're in the middle of a range. From kind of the indicator standpoint, we're looking about flat as well. So probably not something I would take action on yet. And, you know, for me, I want to see, I want to get in that little bit of a strong trend. You know, I'm not one that tries to pick the support or the resistance. I just want to, you know, if the thing's going to rocket 20%, I'm okay with getting in and out for 5% if I can kind of grab that trend.
Yeah, that one last one, CLF, that's starting to get some momentum here today. It seemed to me like, you know, well, it's still not out of the woods though, huh?
No, almost an inside day, and yeah, a little bit down to flat on the indicators. So, you know, I think United States Steel may have had something as well, or see, that's actually a little bit of divergence here. So those, when I see those, it makes me want to look for a little bit more action. If I see the price moving up, but on less and less bullish candlesticks, I just start to get a little bit worried. And conversely, if the stock is moving lower, but there's more and more bullish candlesticks, like you can see kind of back here, that would be the same thing as if I would short, not a reason to kind of counter the trend entirely, but maybe enough of a reason to go, okay, let me take some profits or move up a stop or something like that.
It makes sense that everyone's going into the defensives because they're going to want to get a dividend and they don't want to be in a high PE. And they can see that the 3-month T-bill is at 4.34 and the 10 years at 3.8. So that's a definite divergence. And I mean, inversion. And the history of that inversion is like 8 out of 8 times there's been a recession. So, I mean,
Okay.
yeah.
Cash now, right? We know that's the most important thing in this market is, if you're paying me a dollar right now is way more than $1 a year from now. And as long as that continues to be the case, we're gonna be playing these boring names, which, as traders, right, we want the Zooms that are, doubling every month, or the Pelotons that are going crazy, but you have to give what the market's going to give you. And just right now, it's not giving us fun. It's just giving us boring. And
it's giving you utilities and staples.
Yeah, that's what you got to take.
Yeah, that's what. Well, I guess, like I say, people are trying to run for cover, and they know there's a lot more cover in those type of things than there would be in a non-yielding high P type thing.
Well, yeah, and it's if I can make 5% on my money on a high dividend yield on something that's fairly safe, or a T-bill or something like that, then why would I risk something that may pay me 25 or 30% 5 years from now? It's the math just doesn't work anymore. It worked for a while and it just doesn't work now. And I think you're going to see a lot more of companies trying to rebalance and companies trying to figure out what to do next. You're seeing a lot of cost cutting methods and layoffs and all of this, because everyone's got to get leaner and they got to start producing dollars and cents now, as opposed to trying to swing for the fences and grow now and then kind of do something later.
Right. Hey, Sonny, do you want to put your screen back up here and let's go through some things that you might be watching as well? I know you have some things you hold on to for longer term, and then you do short-term trading with the rest.
I do. Thank you very much.
So maybe you could throw a few things up there that you've been looking at as well.
You name them. I'll throw them up there.
Well, I'll tell you one that's started to go is Keys, Keys. Keys Technology, that they had good earnings and they're starting to look like they're trying to go up. Is there a trend there to be had, or?
Not yet. It's pretty sideways. We've got when the dynamic moving average, the purple and the gold, when that goes flat, to me that says do nothing.
I got you.
So that's a sideways movement right there, if there ever was one.
How about over in China? They're having a bad day today, but what about LVS, Las Vegas Sands?
Well, that one looks pretty good, although it's right at a flat DMA too, but it's been going up. It showed strength by only coming down to the lower inner band instead of the lower outer band. So that's strength. And it jumps right out of there. And then today it's got a little correction going on.
Yeah, it does.
I think that's going to bounce off there and go on back up again.
Yeah, I mean, they're talking about opening up China by March or April. So obviously we're in November. So, they're still going through cases jumping and some more lockdowns. But this would be something because, when they do get let out of their apartments, I think gambling is going to definitely come back into favor. And what about?
I would agree with that.
What about DIDI? That's a ride sharing Uber type company. And of course, you don't need a ride when you're locked in your apartment, but when you come out, you might need a ride. I think it's DIDIY.
Oh.
For whatever reason, they put a Y up there now.
Delisted. That's why it's on the pink sheets now, I think.
Oh, so, okay.
Be careful.
That would be very careful. Of course, at $2, you're careful right out of the chute, right?
Yeah.
I mean, most stocks you lose $2 before you get back from lunch. So, here, as long as they don't lock you out, you can still have the $2. Now, I hear what you're saying. This is a very speculative situation, but it does have a story to it, and it does have a situation that could work.
Let's look at it on a longer term chart. There's a weekly chart.
I just thought it was interesting because, ride sharing's, it does seem to have a future to it. And the fact that everyone's locked down would make this business out of favor.
Mhm.
And when they come out of there, just like a Cheesecake Factory wasn't very good when we were locked up. And then when people could get out, they couldn't wait to get their Cobb
Fix.
salad or whatever they buy over there.
Cheesecake.
Cheesecake Factory. Yeah, that's what they get. Vanilla cheesecake. Right? What the gaming stocks look like they're going south here. MGM. Of course, like I told you in the beginning, we've got an inverted 3-month and 10-year. So looking for upside is is a rough racket.
Well, and this one's not doing too poorly. I mean, it's not racing for the sky, but it's still actually heading upward. So from back in June, we've got a nice slow progression up. We've got a little correction here yesterday and today. It's going to hit that DMA, and all likelihood, because gold's on top, it's all likelihood it's going to continue on up to the upper band.
Now, what are you showing on U.S. steel? Because, it is popping pretty good today.
What's the symbol?
X. And if the Republicans and Democrats could agree on anything, they could probably continue, agree on fixing the roads and fixing the bridges, et cetera. So this could be a place where they'd print money.
They sure need to be fixed over by my house. I tell you, send them this way.
So this thing is starting to get bowed legs, right?
Well, I don't know. Look at the, I call these attractors, support and resistance and moving averages and things like trend lines and that. So right here, I've got an attractor overhead here, 2 places, right there and right there. And it's going to hold down any price movement above, that's about, what is that? That's about
25, 26 bucks.
88.
Yeah, 26 bucks. Buck above where we are now.
Right there. That's going to hold down that movement up.
Yeah. If it were to get through that, that would be something of
that
note.
would be very bullish. Yeah.
Yeah. Let's go through some of these things like these energy stocks. I mean, let's go with MRO. Yeah, that was pretty good for a while, but I think the bloom's coming off the rose on some of these things. Huh?
Well, and look here, it's hitting the DMA in the midline.
Yeah.
And it's 3 little bitty blue bars right there, all at the midline. That's a sign of strength. That says to me it could go on up. So
it still could be by the dip. What about your
well, sorry, just to pop in on that one. Don't mean to interrupt, but the candlestick reading indicator that we just talked about there on that MRO, I'm just bringing these up as you guys are, is actually showing really, really high. It just spiked up actually the last 2 days, probably because of those, like you were just speaking about, a lot of bottoming tails and small candles into that, and an increase in the relative strength index. It's almost up to 80, which is a really, really high reading. So this is actually one that I was just writing down as you guys were talking, because if it can get kind of back over that 30-ish area, it might be a place to try.
Yeah, because what we're looking at here on these oil stocks is, are we getting a dip or is it game, set, match? And if it's a dip, obviously, like you say, you want to take advantage of it. Another one would be Schlumberger and Halliburton, SLB.
And that looks pretty good. I mean, we had a nice run up on Schlumberger. We've got 3 blue candles right here hitting the midline. When they dip under it like that, just slightly, they usually capitulate and go back in the original direction. So we've got a flagpole and a flag, and it's going to go on up.
And the trap door would be a move down towards 41 where the 200-day is, huh?
Yeah.
What about on Halliburton? Yeah. Oh, yeah. Would you want to throw? Yeah. Why don't you throw in, Michael, if you see something, what your opinion is on these things? Yeah.
Well, yeah, and just with Schlumberger, the same thing, a big spike in over the last 3 or 4 days in the candlestick reader. $50, obviously a really big level in Schlumberger. It was the high going back in June, and then it was the low in late October, And then we've got that big hammer candle now. So this is a really interesting one. If it holds over 50, I think that's your play.
Yeah. And then, like I say, the risk would be it breaks. And then if it broke, it could go $5 or $10 down pretty fast. If like we saw a big break, but right now it just looks like a dip. What about Halliburton, HAL?
And that one looks like it's going to go on down. It's below the flat DMA. It's headed for the lower outer band and that 200-day moving average right there. So it can bounce off the 200-day and go back up again, but more likely it's going to break through it and come on down.
What do you see, Michael?
Yeah, for me, it's kind of a bit of a mixed bag. So the spike in the candlestick reader, again, just because the 3 bottoming tails, I would bet, but falling off in the relative strength scanner. So, just not looking nearly as good there. So it's, and anytime, again, I need everything to line up before I'm interested in this one, as opposed to the rest of them just seems relatively weak. So if any of them, right, if you're going to play that space, the oil and gas and that kind of thing, I think the other 2 that we talked about, the MRO and the Schlumberger, is probably going to be a better bet.
Now, a real darling is this Devon Energy, DVN, but it's gone up to 80 a couple of times and didn't like the altitude.
And it still doesn't. It's going to go on down to the lower outer band here. We've got, and the 200 again is right there at that. So we're looking at 63.50, and we're currently at 67.83.
Yeah, and this is from my readings here. This is the weakest one yet. So, and again, I think this kind of highlights, at least for me, and the way that I look at the markets and the way that I look at trading, is that there's not a lot of sense of trading all of these different oil sectors, but or oil stocks. But if you are bullish on oil, the kind of analysis that we just went through here, I think is really powerful for your listeners, because you can sit down, you can have a thesis of, okay, I don't think we're done in energy, I think this is a pullback. And we went through all these different stocks, and there's some that both of us seem to like more than others. So, doing that kind of filtering to say, okay, I very much, have a thesis on what I think is going to happen on energy. What I'm going to do now is I'm going to go through and I'm going to look at all of these different names, and I'm going to pick a couple based off some criteria that I have. Maybe, whatever indicators you look at or something like that, or it could just be relative strength or whatever. But having that filtering mechanism, I think, is great, because not only are you filtering down by industry and saying, hey, this is the industry I think will do the best, but you can also do another filter down by individual names. And the beauty of that is, even if you're picking the strongest names, even if your thesis is wrong about energy, hopefully you're going to lose a little bit less if you're, in the strongest names as opposed to the weakest ones.
Yeah, I think that's the theory that shows the defensive. Speaking of the more defensive, let's put Bank of America up there, because it seems like people are interested in the banks, because, their net interest income is going to go through the roof. But I always wonder who owns all those mortgages and bonds that were sold at the low yield, because obviously somebody's holding on to some pretty big losses there. And I'm just wondering who they are. We'll probably find out sooner or later, right? Like we did with the crypto, right? We found out sooner or later that everything wasn't right.
Yeah.
But anyways, Bank of America looking pretty good, right?
It looks pretty good.
Yeah,
with some rising interest rates here, they can actually start making some money again.
The one problem is the inversion, though. That means, on the front end where they might have to pay a CD that has a higher rate, that could maybe pinch their margins a little bit. Also, loan demand isn't there anyway, so it doesn't really matter, I guess, right?
Yeah, who's refinancing right now?
Zero, nobody.
Yeah.
One other energy is natural gas. Everyone's telling me there's a cold snap around the country. So what's RRC, Range Resources?
Yeah.
Hanging on for dear life. Mhm.
Well, that couldn't be much more sideways, could it? I mean,
Yeah.
we just like this DMA and it's just up and down, up and down, up and down, right? Above it
Yeah.
and below it over and over.
And that's the same as what I'm seeing. And it's funny, it's why a lot of this trend analysis and these indicators work, right? Is because we are looking at two different sets of charts and two different sets of indicators, but the thesis behind it remains the same, right? You're buying the stuff that's has a lot of interest and is going up, and you're selling the stuff that has no interest and is going down, and then you're sitting out of the rest. And this is one for sure that I wouldn't take a bet anyway.
Do we see anything in solar, RUN, Sunrun?
Sunrun called me the other day. I would like to buy a Tesla wall battery. You know, those Tesla wall things?
Do they have them?
Yeah, they do.
Huh?
They just came back in stock. They were out of stock for a while.
Yeah.
Yeah, that's a good use of 15 grand, I think. Put a
Yeah.
battery on your wall. So this is looking really good. It's gone up through the sideways DMA. It's gone on up, 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 hit the upper band, retracted here just a little bit.
Mhm.
I think it's going to go on, well, not much more to there probably, which is 34.89, so 35. We're looking at that before we have a little bit of a retracement.
Yeah, same thing here. We had a little spike in the relative strength on that big kind of candle breakout, and a rising looking at the candlestick reader, and then just, you know, it's a classical charting. That's a pretty solid looking bull flag. So right, you're just looking for some sort of breakout continuation there. Ride the trend as long as it goes.
Yep. Isn't it fascinating how we can come from such different outlooks and come to the same answer?
Well, and it's I think it's really cool too, because again, as a CMT, as a chartered market technician, they teach, you know, the four kind of, or I always say that the two core tenets of technical analysis is just trend and support and resistance, and you know, defining them in any way you want, but really it's that trend that comes down to everything. So yeah, it's you know, the one thing I always say to kind of newer traders is, you know, like we just talked about with the last name, the natural gas name that we looked at, if you can just spot the trends and stay with the stuff that's uptrending and avoid the stuff that's downtrending or not moving, then great, right? That you're already ahead of 90% of the traders out there.
That's true.
Let's go into the healthcare a little bit. Walgreens has been doing very well lately. WBA.
Yep, they're doing well. They've got 1, 2, 3, 4, 5, 6, 7 days of 7 trading days of sideways that they're going to have to overcome. We need some kind of good news or reports of some kind that will encourage that to go on up. If it's not going to go on up, it's going to go back down to the midline, which is currently at 38.24 with price at 40.54. So we've got about 2 points that we can go down. Volumes falling off on this daily chart. So we need something. If it's going to spike on up, it's going to have some kind of news.
Yeah, 41.5 ish, 42. I think that's the key with this one. You know, if it can't get over that, and if it can't get over that, I'd say in the next few days, you know, there's all those people that are going to try to play the pretty clear resistance zone there. So if it gets going, then those people are wrong and they have to cover. But you know, it's looking a little bit just flat right now. I'm looking at all the other metrics. There's a little bit more than normal options I'm seeing. I don't use it very much, but TradeIdeas does have some fundamental scanners, but the put call ratio is actually a little bit higher than normal today. It's like 1.1. So it's not extreme, but just there are some a little bit of an increase in put buying going on in this one right now.
Yeah, they're probably thinking the pullback is going to happen.
Yeah.
There's a drug one that deals in generics called TEVA, TVA, and they had a lawsuit that got settled and it spiked up to about 10. Then it came back into this 8 area. I'm just wondering if
Not TVA, Jim.
TEVA,
TE.
TEVA. There you go.
I was gonna say TVA is Tennessee Valley Authority.
Uh-huh. And I was wondering if we can do a longer term chart on this so you get an idea of where it's been over the last 5 years, let's say, or whatever, on a weekly or whatever. Yeah.
So a monthly chart right there.
Yeah, I mean, this is the poster child for sideways. But, sometimes sideways is followed by something,
Down to sideways, we can call that one, right?
Yeah. Yeah. Well, they had a big lawsuit problem.
And we've got this history right there. It's going to go on down to touch that support.
So it's really dead.
It's dead.
Yeah, it's not something that I would buy like that. But again, just looking at the same options thing that I do peek at from time to time, 143% normal option volume. So nothing crazy, but a little bit more than normal. And a 0.7 put call ratio, just meaning that there's more calls being bought today than put. So if you're one that subscribes to the theory that the options people kind of know what's up, then there's some buying going on in calls, but all time frames, you're just kind of stuck in the middle of a range. Just no fun.
This would be one that I would be intrigued to buy a long-term option on of a year or two. And see if there's going to be a turn over the next couple of years kind of thing. You know what I mean? Because you've got to figure the premium's got to be dirt because the thing hasn't gone anywhere. So you're going to put up hardly any money. And then you lock in price for a couple of years and, go to sleep and see if it wakes up and does a Rip Van Winkle on you. You know what I mean?
And you're a millionaire.
Sometimes, sometimes like I've done it with things like Freeport McMoran at $5 or $10 a share. If you look at something that you don't think is going out of business and you think that over time something good will happen, like it did with Freeport McMoran when it ran to 50, sometimes these things are not the worst thing. And TEVA, does have a reasonable business, I think. So anyway, it's intriguing to me because it's in healthcare and it's in drugs and the whole country's on drugs and, it's going to age. So that's more drugs. So, it's not like their business is going out of business, right? Before we lose the time here, one thing that has come off the canvas, but that's about all you can say about it, is the precious metals. So let's take a look at a few of those because, after the 2001 top, value was the way to be for the next 5 years or so, and the gold went on about a 10-year run. So after the last time we had a very big peak like we had here recently was 2000, 2001, and two things that definitely happened in the subsequent years was value outperformed growth, and the gold went from 300 to $2,000. So we know value's already started to run. Let's see if this thing
went from $2,000 back down to $1,000.
Well, hey, I don't care where it goes. If I'm in there from 3 to 2, I'll leave it 2 and leave the rest.
Yeah.
But anyway, let's just see here if there's anything going on. Let's start out with Newmont Mining, NEM. It's at half price from where it was, and it pays 5% dividend. So it's not the worst place to look around.
And it's largely sideways, as they say, sharply sideways technically. Yeah. So that's just watching paint dry right through there for weeks and weeks and weeks.
Yeah, at 5% dividend.
Yeah. Well, there's nothing wrong with that.
I don't think so.
So for $44, you get 5% on that.
The only thing I like about this chart, and again, I'm more of a trend trader, so this wouldn't be something that I would do, but those 3 red days in a row that you had right after earnings,
I see.
Just a couple days ago,
yep,
that broke a major resistance, and then within another 3 days we were back up over it. So $40, it was a very important level for this. It had earnings, it kind of cracked under 40,
yep,
but then just got bought up. So that's your very kind of typical bear trap. And the beauty of playing things like that, bear traps, one of a close friend of mine, Brian Shannon, always has a saying, from failed moves comes fast moves. So if you got enough people trapped in there, maybe, and the beauty of it is you've got you've got a level to play off. If it's at 44 right now, if it closes back under 40, you're probably wrong and it's time to go. So, I would have just dismissed it entirely until you mentioned the dividend. So that kind of makes me think, well, if you buy it here and you're risking to 40, you're risking about 10%, pays a 5% dividend. So even if you are sitting for a long period of time, at least you're getting paid to sit.
Yeah. One of the problems is with the inverted yield curve. If we go into a recession, and the Dallas Fed is talking about real estate dropping 20%. If we go down 20% in real estate, and the yield curve continues to invert, and we have a recession, I don't think there's anywhere to hide.
I have to ask, what do you mean if we go into a recession?
Well, I'm just being polite
chart,
here. I'm being polite here. I don't want to be like a
if
guy.
I look in this chart,
Yeah.
that we're down more than 20%.
Yeah.
Hello, this looks like a recession to me.
Yeah. Well, and like I say, that means, money costs more money, and then it's tight, and then the revenues drop, and then the earnings
And that's
drop.
all happening. That's all happening.
No, that's my cup of tea. But again, I'm not a fighter. If it starts getting above certain levels, that's another story. Let's look at a few more of these real quick. AG is a silver one.
Let's put it back on well, that's okay. That's a weekly time frame. That's just, boy, that had a blow off top there, and it's just been going down ever since.
Yeah.
Nobody likes to carry around big bags of junk dimes.
Yeah.
I think those gold pieces are really pretty though. You can carry those around.
with some type of defense mechanism. Do you see any? I mean, there's not much to report here, is there,
There's
Michael?
not much to report. It's going down.
Yeah, same, right? You had that blow off top that was mentioned, and now you're basing, right? So after you have a big move and then you have a base after that, that's generally a flag. If you're into trend trading at all, you kind of have to bet that this base will resolve at some point in the direction of that trend. And it's going to continue. Now it's as a Canadian, I see that's a Canadian company. I wish they did well, but I wouldn't bet on them, that's for sure.
What about Suncor? Would you bet on those? Those guys are up there in old
what did your friend say again, Michael? After
failed moves comes fast moves. I really like that.
After boring comes fast. Okay.
A classic one on that is that Russell 2000, when it went to 240, and then it just collapsed from there, and it really came down fast. That IWM.
Yeah, I know traders who make a really good living, and all they do is they wait for whatever quote unquote should happen to not happen. So that Russell 2000 moves, I know someone who as soon as it broke out and then failed, and this was I think mid 2001, just loading up on puts all day long, and that's pretty much all he had to do for the entire year. And it's just the fact that when people are trapped, it's the only time that you're kind of forcing somebody to take a trade. If you can get them right, then you're forcing them to take another side, and that's the best trade to be in if someone has to liquidate one way or the other.
Yeah, sometimes they call that liquidity provider. In other words, if something's going through the roof and looks crazy, somebody is obviously providing liquidity to that stampede, right?
Mm-hmm.
And those guys are not the dumbest guys in the room sometimes, right?
Mm-hmm.
One of my clients, Jim, I don't trade options. And one of my clients called me last week and said he's trading options with sunny bands. And I'm like, well, how does that work? And he said, well, when price covers over the lower band, you wait a couple of bars and then you catch it on Friday's options expiration, sell puts, and it's a sure thing.
Well,
pretty interesting. I had no idea.
Yeah. Hey, one last one. Let's look at Freeport McMoran. Like I told you, I had some personal experience with it. It went up to 50. We got out of it in the 40s, and then it pulled back to 25, and then we got back in, and now it's at 35. What's it look like now?
Give me a symbol.
FCX, Frank Charlie X-ray.
That looks like a way spread out head and shoulders there. That funny looking head and shoulders, but it it's either a failed Head and Shoulders or that's going to come back down to around in here.
Yeah. That's, I got to keep this on a short leash.
Yeah, and you know, Head and Shoulders patterns are the most failed of all the technical patterns, but yeah,
But
keep that one on a short leash.
it was a good buy against the bottom of those sunny bands that I was talking about around
Right
25
there.
bucks. Yeah.
Yep.
But
And,
now,
and right back here is where the sunny bands gave the buy signal, right
yeah, yeah,
there.
yeah.
And yeah, for what I look at, you know, everything's just looking flat. So just one of the ones that I just wouldn't be too interested in.
Yeah. When they go up and then they go flat, you got to be a little nervous because, you know, when they start losing their boat legs, you know, all those people who bought at 25 may want to start getting out, huh?
Yeah, and then you know, to kind of resolve what will happen next is generally when you zoom out to a longer time frame, right? So, you know, the question is when they lose steam and our people are going to be nervous. You
Yeah.
know, if the stock's in an overall uptrend and it pops up a bit and it loses steams, well, people might not be that nervous. But when it's you know, in a longer term kind of downtrend or it's under pressure, like this one is a little bit, if you go longer out, then, you know, if people start to sense that the top might be in, I think they're a little bit quicker to run for the door.
Hey, one last one. Let's do QQQ and find out
Oh,
if
absolutely.
these ARC funds and all these guys who had the dead cat bounces, if the cats are going to go back into the woods. Yeah, into the
Well,
bag.
you want to see the ARC funds on a monthly basis. She spent 2 years going nearly straight up, and then the next 2 years going straight back down.
Yeah. But what is this selling us? Pretty much a lot of resistance right around that 300 bucks.
We've got an attractor right here, and that's where we're going.
I got you. Yeah, I mean the
Oh,
cloud.
It's under the purple. Purple's on top. It's under. It's a little flat right now, which gives it hesitation, but it's going to go on down.
And about the same here. Now, one thing that I did as a bit of a quant nerd and that kind of stuff is when we had that CPI print, not the most recent one, but the one before that, where we
Right.
gapped down huge and then we rallied up. I did a bit of analysis, which is something cool that we can do with trade ideas. Said, hey, how many times in the last 20 plus years has that occurred where we had this massive gap down and then it rallied to take out the high of the day before it? And there was only 2 other times that I could find in about the last 20 years that happened, and that was pretty much near the bottom of the 2018 market and pretty much near the bottom of the 2019. If you remember both those years, you know, they had these kind of violent trades. Now, you know, that's a sample size of 2, so I wouldn't get super excited about that, but it was kind of interesting. So you know, I think as a longer term trader, maybe you could just say, hey, I'm going to play against that level. If you're someone that likes to buy pullbacks or support, just in case it's going to happen for a third time. But, you know, it's a sample size of 2, so I wouldn't get too excited about it.
Well, Michael, could you put your screen back up there and then again briefly explain some of the things that you can do for the listeners here, and also give contact information so they can get a hold of you?
Sure. Yeah. So, well, my Michael Nauss, CMT on YouTube and Twitter and, you know, everywhere else in the world. I'm pretty Googleable. And trade-ideas.com if you're interested more about the software itself. But I know this sounds really salesy, but I could ramble on for hours about everything that the software can do. But I won't. Just know that we are scanning, we're alerting, we're auto trading. We can send automatic symbols or chart symbols directly to Interactive Brokers and E-Trade, with some more brokers coming in soon, so you can trade directly from the chart. We have access to scanning kind of whatever it is that you want, from moving average crossovers to candlestick patterns. And hey, maybe we'll chat about getting those a scanner for those sunny bands at some point. You know, pattern recognition, Bollinger Bands, MACD. We have the ability, we're from day trading to swing trading to intraday trading. So these scans that I have up here are showing me live in real time, updating every second what the strongest and weakest stocks in the overall market. I have these more set to kind of low float, low cap things, but again, just constantly saying, okay, ZH is just getting killed right now. UCL is doing fantastic right now. And these are updating live in real time, again, with charting. You know, if you want to build a scan that says, hey, I want stocks when they're crossing their 2-minute 200 period moving average, that's the kind of stuff we can do at a granular level. At a broad level, we have access to, you know, scanning for pre-market gappers, you know, things that are moving currently really, really fast, which is what I have up here. Different sectors, short squeezes, meme stocks, unusual options, sector scans. Right, if you're looking for something to help you find what's moving in the market currently and looking to take action on that, then Trade Ideas is definitely something to check out.
Yeah, I definitely see the word comprehensive coming to my mind when I see all the stuff that you can do. And then, of course, you can probably help people to kind of whittle it down a little bit to things that might be appropriate that they're looking for, right?
Yeah, so we have a live stream going on all day long at just youtube.com/trade ideas. It's something that I do on my own channel, which is just youtube.com/Michael Nauss CMT. Because that is a pretty large problem that I see a lot of traders have, where you know you can do so much. The question is what to do. So what we did a lot of today, which I thought was cool, was show how, you know, two different trading styles can kind of look at a chart and look at it differently, but sometimes see the same thing. So I think as a trader, the really important thing is to make sure that however you're looking at the chart makes the most sense to you. So you can sit down and say, hey, I want to just focus on XYZ, and we can build a whole suite of scans for you that will do that, and, you know, get your charts all set up, and then away you go. So you're not having to try to look at everything out there, just the ones that are on the move based off your trading plan at the moment.
Sure. That's outstanding. Okay. And Sonny, again, what do you now have as an offer for people to go over to Money Mentor?
Well, moneymentor.com, we have right now through tomorrow, 30% up to 30% discount on my indicators, including Sunny Bands and several others. When packaged together as a bundle, you can get them cheaper by the dozen. So go to moneymentor.com. I've been a professional trader for 42 years. I'm an easy language programmer, a mathematician, and author of soon to be 7 best-selling trading books.
Perfect. Okay, so that's the way you guys can get a hold of Michael and Sonny. And as far as Option Professor is concerned, at optionprofessor.com, you can get PDF reports on how to hedge against market declines and also upside surprises. And obviously, we've had both of those this year quite a bit. So these strategies are very helpful to people, and we explain them as well. So optionprofessor.com. David, I'm going to send it back to you. I want to thank Michael for being here. First time I've talked to you, and God, it was very good, very informative. Thank you very much. And Sonny, as always, it's good to hear from you. So thanks you guys for being here today.
Thanks for having me.
Thank you. Bye.
All right. Yeah. Great show today. So covered a lot of good stocks, a lot of stocks, a lot of good info. So just a quick reminder, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. And you can also just go to TimingResearch.com to get access to this show as soon as I can get the archive posted, as well as especially the big event we did last week. Like I said, we had 39 great presentations over the course of 4 days, and those will be permanently available on Timing Research to review anytime. And I just want to thank my guests again for today, Michael Nauss of TradeIdeas.com, trade-ideas.com, and StatsEdgeTrading.com. Yeah, thanks again for Michael for being here for the first time on the CFN show, and Sonny Harris of MoneyMentor.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you, David.
Thank you.